And thank you all for joining us here today. My name is Carla Arsenault. I'm the President and CEO of the Cape Breton Partnership. The impact of COVID-19 around the world has been unprecedented, and even as recent as 2 weeks ago, I'm sure we all certainly couldn't have predicted where we'd be today. As Cape Breton Unama'iki's private sector-led economic development organization, our main priority continues to be the health and wellness of our employees, our clients, and our community. Our hope is that Cape Bretoners are able to take the necessary precautions and focus on staying healthy and safe at this time. We are working with our partners at all levels of government and making sure that your concerns are being addressed and doing what we can to make sure that we keep the flow of communication open. The partnership focuses on connecting people from any industry or sector to supports and resources that they need to be successful. Last week, we began reaching out to clients and investors to understand their current reality, their most pressing concerns, and what tools would be most helpful right now. Based on this feedback, we're hosting this webinar series to provide you with a host of different topics to help address important concerns for Cape Breton businesses. We also have a host of resources available online on our partnership website, and we'll continue to update the information daily as more becomes available. So this is our very first attempt at a webinar, so we ask you for your patience. Please make sure to ask lots of questions and let us know if there's future topic ideas that you'd like to see. We hope to share this session on our social media channels so that more people can access the information today. So to get started with today's session, I'm pleased to introduce our partners at Grant Thornton, Mr. Rob Wadden.
Okay, all right. So as Carla said, I'm Rob Wadden. I'm a principal in our Grant Thornton Sydney office, primarily focused in our assurance department. I have Patrick Leahy, who is a partner in our tax department, who's also joining in on the call. So we'll be kind of flipping back and forth as we work through the presentation. So obviously the information is changing very rapidly each day. There's new programs being released. So we thought we'd give a shot at a brief overview as to some of the changes that have been implemented for where they stand today, and our presentation should be fairly quick, but we hope there's going to be lots of questions that we'll jump in at as once we get through the beginning. So I'm just going to bring the presentation up. Is that coming through? Yeah.
Yes, it is. It's coming through.
Okay, great. So the topics that we wanted to cover today range from communicating proactively with your lenders and stakeholders. So there are going to be obviously some significant changes to your business as we work through the COVID-19 pandemic. So we really feel communication with those parties that you deal with on a regular basis is really important. Business planning and reporting. So some of the issues around just starting to forecast what the impact is going to be. We do have a section that's going to outline the government support programs and other incentives that have been released to date. We'll discuss the risk analysis that we feel every organization should take as they're working through this. Planning for the financial statement impact and what changes you will see on your financial statements kind of moving ahead. A lot has been discussed already around the changes with Canada Revenue Agency and their filing deadline, so we'll highlight those as well. Working safely and collaboratively, so as you work through kind of the changes to your workplace and how you deal with vendors and professional services, we felt it was important to highlight that. And then preparing for some of the time-sensitive matters that are going to be impacted by this. So communicating proactively with lenders and/or stakeholders. We've been seeing a lot of this lately. It's been kind of the first response is people reaching out to their banks and seeing what can be done around the lending terms. So it's really important to have that communication now. You should be discussing whether you need to revise your deadlines for submitting financial statements, typically within lending agreements. they could be anywhere from 90 to 100 day turnaround after year end. So we are seeing impacts with how that's going to be able to be accomplished. Discussing needs for additional financing or flexibility in repayment terms. So as I mentioned, we have seen pretty consistently across the major banks is a waiving of principal payment for up to 6 months. So that can help alleviate some of the cash flow concerns that business owners are facing. Determining if any of the new circumstances would impact your covenants or are there any other terms of your lending agreement. So a lot of service agreements do have financial covenants that are required to be met. So what is the impact on, if your results are different than what you expected, what are the impact going to be on those covenants? Discussing changing your budgets or forecasts as a result of the changing business environment. So obviously lenders and stakeholders are really interested in terms of where your business is going. So with all of the impacts that COVID-19 is causing, really important to get a handle on what you think that the financial statement impact is going to be. And then obviously reviewing your insurance coverage, what's covered under business interruption. Some policies may specifically discuss like a virus outbreak. So it's really important to understand your coverage, reach out to your insurance providers to get a good handle on what may or may not be covered. Business planning and reporting. So the impact on cash flows and covenants. So we don't really know how long this is going to last or how long businesses are going to be impacted by this, but we think it's important for businesses to really take a hard look as to what the impact of a potential drop in sales or workforce or whatever it may be, what kind of an impact that's going to have on your financial results. So probably a good starting point is a 13-week cash flow forecast to understand what the changes of expected sources of revenue. So how much that revenue drop may be, what you're going to be able to save in expenses as a result of that, and how you're going to use your cash. So it's really important to start to develop some sort of a baseline for where you think this might go. Really important to understand the variability of your expenses, because this is kind of the only known and controllable variable in the forecast. So if you know an expense is variable, then adjusting your forecast for that and taking away discretionary expenses and things of that nature. Once you have a handle on that, then taking another look at any covenants that you might have within your financing agreements and what the impact is. Will you be in breach of covenant as a result of some of these changes that you're facing? So it's really important to kind of get in front of that, so that if you do think you're going to be short of a covenant, that you're having that communication early with your financial lending institutions. Obviously, forecasting what the demand or revenue is going to be is really going to be difficult, but you can kind of do a sensitivity analysis and plan for different scenarios, kind of best case, worst case, and mid case. So you can kind of plan for any changes that you might be seeing. And then once you have this together, at that point, you can really identify what your cash flow requirements are going to be. We'll talk about it a little bit later, but there have been new programs released, some additional financing alternatives for businesses in the short term, whether it be lines of credit or new financing, new loans. So until you get a good handle on what you might need, then you can determine what the best fit for those financing alternatives would be. I'm going to pass it over to Patrick, who's going to walk us through some of the government support incentive programs that have been released to date.
Okay. Thanks, Rob. But and one thing I'll just before we go into the government support programs, I will just mention a couple things. Rob just did a very good overview of the importance of cash flow and ensuring it's a very difficult time and the impact on cash flow. So a couple things from a tax perspective that you could look at to increase cash flow today. One thing is for business owners would be the type of remuneration you're taking. So if you are drawing salary out of a company, you could basically switch. If you're in a corporate environment, you could switch to dividends, and that would basically, the benefit there from a cash flow perspective, that you wouldn't have payroll deductions. So you wouldn't have CPP deductions, you wouldn't have EI deductions, you wouldn't have, if you are in insurable employment, or the employer matching on that. So that would free up some cash that you otherwise would have to pay. The other thing too, from an individual point of view in remuneration, in Canada right now, there's a significant difference between the dividend rates and the capital gains rates. So if you're in Nova Scotia and you're a high rate taxpayer, you pay approximately 48% on what we call ineligible dividends, and approximately 27% on capital gains. So there's strategies out there where you can structure your remuneration to take advantage of these capital gains rates. So there's a couple things from a corporate structuring point of view. If you're looking at your own business from a tax perspective, one would be, if you have a year-end coming up, you can look at writing down inventory and reducing your overall corporate income. Or in a case where you may be creating losses now, those losses can be carried back to prior years where you had taxable income and recover some of the tax that you paid on that. If you, in a corporate environment, if you have investments or a non-registered stock portfolio, obviously the stock market taking a significant hit in the last couple of months, you could trigger some of those losses and carry back those capital losses where you pay tax on capital gains. You do have to be careful of superficial loss rules, which basically say there's a 30-day window that you wouldn't be able to repurchase that stock. So that's something you should talk with your own financial advisor, investment advisor, and not let tax completely drive that planning. The other thing too, the benefit of dividends, if you have inactive income or passive income in your corporation, you very well likely may have what we call refundable tax, and that refundable tax can be refunded through paying dividends out to you personally. So that is a source of cash flow or a source of cash to reduce a corporate tax liability. So that's just a couple things. There are others. There is some other opportunities. We talk about estate freezes and so on when asset values are low. They wouldn't be critical right now, but something that you may want to talk to your advisor on as planning that you could take advantage of right now. So just going through the government support and incentive programs, and I'll go through these. One thing I have noticed with our own clients is that there's so much going on right now, over the last couple of weeks with the COVID-19 crisis, that a lot of people are not aware of some of these programs. So we want to make sure that this gets out, that people are aware of the programs they can take advantage of. So the first one that we'll look at is employment insurance. So basically there's a EI sickness benefit, and I think EI in general, if you're affected by the COVID-19, any impact from the COVID-19, they've eliminated the 1-week waiting period for claims that was in place. So that's a benefit. One of the major benefits they put in place for business is the wage subsidy program. And that one there is basically any remuneration that was paid to employees between March 18th and June 20th, I think, is eligible for the wage subsidy program. That has a maximum of $1,375 per employee and $25,000 per employer. A big thing there, it is not shared among associated corps. So if you have multiple corporations in a corporate group, you can have $25,000 savings in each of those corporations. There is some calculation, so just timing on that. That program, again, is for remuneration paid beginning March 18th. So for most people who do monthly remittances, the first time you'll have to adjust that remittance will be April 15th. So keep that date in mind. If you're someone who has to remit on a more frequent basis, then you'll have less time to take advantage of the benefit. So just make sure it's a heads up on what your next remittance is after March 18th. One thing that is not available, you have to be a CCPC and eligible for the small business deduction. If you're above the, for large corps, which typically there wouldn't be a ton of in Cape Breton, above the $15 million capital exemption, that wouldn't apply. So anyway, that is there to take advantage of for employees. The other thing about that, just as a note, though not critical now, the amount of the subsidy is actually taxable. So you take it off the remittance, and when you file your corporate tax for this year, that amount will be taxable inside the corporation. So it is a taxable amount, even though you are receiving the benefit of not paying those wages now. The other thing too, you cannot reduce, if you have someone who has very little tax deductions, you cannot reduce, take the subsidy off the CBP or EI deductions. So those have to be paid regardless, even though there may be not enough tax deductions to take advantage of the subsidy for an employee. So just a heads up on that program. If you missed the program, if you have a remittance and you didn't do the calculation, you can apply after the fact for the subsidy. That is available. And I don't think the details have been released how that's going to work, but if you do miss it, there is an ability to get that back. So you can switch that, Rob. So the next program is an existing program offered by the federal government. So it's a work share program, and the work share program, and we've already had a number of clients who have started to take advantage of this. Like I said, it's an existing program, and the benefit of this program is it's basically trying to help employers avoid layoffs. And so essentially work can be shared, and the decrease decrease in employment levels that someone have can be essentially, they can receive EI benefits on the amount of their income that has been reduced. So if you had 10 employees and instead of laying off 5 employees, you can work share among those 10 employees. If income was cut by 50%, then they can receive EI benefits equal to 55% of the income that they lost under this work sharing program. This program you are required to be registered with Service Canada. I know there's, again, you have to be patient. There's some issues in just getting these set up, and there's so much going on, but like I said, there's a number of people taking advantage of this program now. And basically this is an agreed upon arrangement between the employer, the affected employees, and Service Canada. There is a fair amount of reporting that goes into this before this is approved, but this is supposedly being changed to make this more accessible. So again, this is something that we expect to see to be popular in this times. It does help avoid layoffs, to take advantage of government programs. And like I said, it's something we're going to see a bit of. The next program, you can flip that, Rob, is the emergency care benefit. So this is, again, a new program that was introduced recently just as part of the COVID-19 response. It's basically anyone who's impacted by COVID-19. So you don't have sick leave or a similar work benefit. You're either quarantined, you're taking care of family members, and so on. The details of this, I think it's $900 every 2 weeks. The details of this are going to be outlined or brought out in April, I would assume in April, early in April, and the same for the emergency support benefit. So the emergency support benefit is a similar program, but it, essentially someone who does not qualify for employment insurance, and it would be similar. I think it's looking at $900 every 2 weeks as a gross income. It doesn't say how long it's going to last. I think it is intended to be a long-term income support program. And again, those details will be released in April. The other thing too on those two programs, they can apply to both employees and self-employed individuals who otherwise would qualify for employment insurance or otherwise could be applicable to EI, but you know, the emergency support benefit one where they are not right now. So it is supposed to cover off a large group of people that are affected by COVID-19. Excuse me. The supplemental unemployment benefit plan, again, this is an existing program, but one that could be taken advantage of. And this is basically has to be approved and registered with Service Canada. And essentially, this is a top-up program. So many employers have top-up programs for employees. who are laid off or otherwise can't work, they will top up their employment insurance benefits. So again, we expect this to be used considerably during the COVID-19 downturn. And the other thing, there's very few details on this right now, but ACOA has announced that they're going to develop programs to try and help specifically tourism operators in Atlantic Canada and small and medium-sized business. There was just an announcement, I think, the last couple of days on that. There's been no details released, but that will be coming out shortly from ACOA. The other thing the government has done, the Business Development Bank of Canada, so they basically put in place a business credit availability program. Now, in the releases on this, they basically asked that you contact, if you don't deal directly with the BDC, that you contact your own financial institution, and they will work with the BDC. They will work with you first to determine what credit you maybe have access to, and then actually refer you to the BDC. I'm assuming you could probably go directly to the BDC if needed. And basically those are just, they're putting a bunch of money into the funds for, to help businesses with credit, working capital loans, reducing rates on existing loans. If you have existing loans, reducing payments, all those types of things, helping business who may need in this time equipment or software, anything like that to help the business through the COVID-19 situation. And then those were essentially all federal type announcements. The province of Nova Scotia, they've also come out with a bunch of different announcements to try and help with the crisis. One being pretty much any provincial organization, agency, or corp, they've deferred payments on all loans until June 30th. So the two big ones we would see, the Farm Loan Board, the Fisheries Loan Board, all those payments are deferred until June 30th. Another big one is workers' compensation payments are deferred until June 30th. And there's a number of enhancements to the small business loan guarantee, which similar to BDC would involve postponement of payments and so on, and dealing with your, I think, which are administered through the credit union. So that's kind of just a synopsis of some of those programs. Just a couple other things that I will mention. For employees, it is critical, and we have clients who are struggling with employees need record of employment, need a record of employment to apply for employment insurance and therefore access many of these programs. And I know there are substantial delays. I think Service Canada has a web access program, which I think what I've heard is has sped up processing by a week. I think it's taking up to 2 weeks to get the ROE processed now. So just a heads up that there is a delays in getting records of employment for employees processed. The other thing I will mention, I forgot to mention regarding the province of Nova Scotia, student loan payments for under the provincial student loan program, those payments are suspended until September 30th, and there's no registration or anything. That will just automatically be done. So anyway, and I'm sure you may have some questions at the end of the presentation. We'll try to answer as many questions as you have, and I'll turn it back to Rob.
Okay, some of the other considerations that we think should be made for businesses in light of this is just a risk analysis. So kind of stepping back and saying, like, if I shut down my business for 2 weeks, what's the impact going to be? So we talked about it from a cash flow perspective, but what does that do for the overall impact of the business? What's the impact if you don't close? So as the government are kind of constantly revising who stays open and who has to close, really important to get a handle on if you are forced to close, if you haven't already, what those impacts are. If all of your employees are now working from home, can the network support it? So I know internally with Grant Thornton, the majority of us are working from home now, and even though we're kind of set up for that already, just given the volume of people that are trying to access the network, we had significant issues with accessing programs and things like that. So it's really important to get a handle on if the employees are actually going to have the ability to work from home. If people can't work from home, what is the risk to your employees if you do stay open? What if one of your employees tests positive for COVID-19? So really things that you should really work through and see what determine what the impacts are going to be. What happens to your business if you as the principal owner get sick? How are you going to be able to keep it running if you end up moving into self-isolation or quarantine? And lastly, what internal controls do you absolutely need to make sure keep working to protect your business from fraud or cyber attack? Unfortunately, we have heard stories of the increase of cyber attack in the wake of COVID-19, especially around things like phishing emails and kind of spoofing emails from people that you think are legitimate, and kind of you let your guard down because you're looking for information around the situation. You might click on a link that you otherwise wouldn't have. So what can you do to make sure that you're keeping those controls running if your employees are working from home or if some are in quarantine? So these are kind of some of the outside issues that you may not give first thought to that are really important in order to make sure you can kind of keep things running. I'll kick it back over to Patrick, who's going to go through some of the changes to the filing deadlines with CRA.
Okay, thanks, Rob. So just we'll go through these. So these are announced probably a week and a half ago. So as everyone knows, personal tax returns in Canada are due April 30th every year, and that has been extended to June 1st this year. So also, if you are self-employed, so if you're a self-employed individual, have business income and so on, typically you have until June 15th to file your tax return, even though any taxes payable interest would start accruing as of April 30th. That deadline has not been extended, so that is still June 15th, with the regular deadline extended to June 1st. If you have a trust tax return with a December year end, and typically with the change in rules a couple of years, most trusts have a calendar year end, and there's a bit of there's a typo in our presentation, but that's been extended to May 1st, not May 31st. So typically those trust returns, so they typically have a March 31st filing deadline. That's been extended to May 1st. You know, people out there, a lot of business owners have family trusts. So that's been, again, extended for a month to have those trust returns filed. Payment deadlines, so amounts for personal tax returns, and I'll go through the corporate stuff shortly, but those for any taxes payable, they've been extended essentially to September 1st, where there'll be no interest accruing in those amounts as long as they're paid in full by August 31st, September 1st. So for corporations now, there have been no extensions. So typically, corporations have 6 months after their corporate year end to file a corporate tax return, and that has not been that's been unchanged or not been changed. What has been changed, if you have balances that were due after March 18th under the announcement, the stimulus announcement, those have been extended to September 1st as well. You do have to be careful with that though. So for example, if you have a corporation with a December year end, typically you'll have 3 months, balances will be due 3 months after year end if you're Canadian controlled private corporation. So that March 31st due date would be after the March 18th stimulus package announcement, and therefore you would get the extension till September 1st. And but if you don't have the small business limit, or it's, you know, you have passive investment income, that due date typically would be February, the end of February, and therefore that amount would still be due. So you could still have interest accruing on the corporate tax balance, even though the return itself is not due until the end of June. So just be careful, make sure you talk to your advisor about filing deadlines and balances, which may need to be paid and which may not be extended depending on your own situation. CRA is, because of the difficulty in face-to-face contact and meetings and so on, there's different rules now where we can get electronic signatures for authorizations to file tax returns. Just to point to, there are a number of things as of right now that have not been extended. So there really is no relief for HST payments or HST filings because they consider that to be trust monies, similar to payroll deductions, other than the wage subsidy program. If you have certain tax elections have not been extended, many of those are due in April and various months depending on the date of the transaction. We also have partnership returns and so on. So there's a number of filings there's been no change to the filing deadline. So do not assume, just be careful not to assume that everything has been extended. If you deal with a charity or on a board of a charity and so on, those filing deadlines for the 3010s, the charity returns have been extended as well. So that's just a couple things on the CRA filing extensions. I think you may see some additional measures come with respect to some of the items that have not been extended as the lockdown gets more widespread. So we'll try and keep that updated. If you go on the Grant Thornton website, we have a COVID-19 response, and we constantly update that, and you can see the various material and so on that's coming out on a day-by-day basis.
So before I move on to the next slide, there is a question there that is tied to these deadlines. So what about a family trust owned corporation with a March 31st year end? Any extension on those? So as Patrick said, there's been no changes to the filing deadlines for those returns. So the return would still be due by the end of September 30th. You'd have 6 months to file. And the interest would not start until after August 31st. So you'd have until August 31st to make that payment before any interest was assigned on that. So planning for financial statement impact. So though you may not know exactly what's ahead, it's time to consider how some of these events may impact your financial statements. So there might be additional preparation time required from your management team to prepare and update your financial statements due to resource constraints. So maybe one of your key accountants or bookkeepers is going to be off for an extended period of time. Then it's going to strain the ability for you to deliver your statements and stuff on time. In terms of some additional accounting considerations that may need to be addressed as a result of COVID-19. So if your financial statements are reviewed or audited, some of the other considerations that might be your professional services advisor might want to make sure that they take a harder look at is revisiting the going concern assessment and truly understanding what the impact of this would be on your business and your ability to sustain from that and still be able to continue in the future. Identifying and assessing subsequent events. So before financial statements are released, you are required to disclose any significant subsequent events. So we are kind of in the process of receiving guidance as to what that might look like. But if you are a business that would be significantly impacted by this downturn, there might be some additional disclosures that are required within your financial statements. Potential asset impairment. So your accountants will probably take another look at certain assets that may or may not be impacted by this, and kind of taking a harder look as to whether or not there's impairment or write down required if the ability to kind of recover on those assets is impaired. Impact on employee future benefits. So if you have future benefit plans with significant portfolios to address the obligations around those benefit obligations, they would have a significant impact with the downturn in the stock market. So there could be some additional accounting or adjustments required to record any impairment on the future benefit asset plans. Collectability of accounts receivable is going to be really key. So your accountant is going to want to really take a hard look at your receivables and make sure that they are going to be able to be collected, and a further allowance might not be required. So making sure that you have a good handle on all your customer accounts. Your accountant is going to be looking for that information, and then possibly some revisions to other accounting estimates. So just given the uncertainty and just changes in the business landscape, there could be some changes to how some of the items are estimated within your financial statements. Working safely and collaboratively. So typically, depending on what your accountants might do, if you have your statements audited, typically those engagements happen at your premises. So currently, at least what we're doing is we're not allowing our employees kind of outside of our offices or from working from home, so they're not able to go to a client's premises. So it's going to really impact our ability to complete an audit and change what we would have kind of normally taken for granted, being there on site and working through the engagements with your staff. Flexible scheduling to reflect the changing timeline. So obviously the ability to kind of get information is going to be impaired, whether it all has to be done remotely or scanned in or things like that. Or if for example, in a nursing home environment, so where they're close to the public, how that actually would impact the audit engagement. Additional project management and coordination to keep informed of status, to continue the assurance engagement moving forward. So communication is going to be really key as we move through any of these engagements. So making sure that you're aware of what your service advisor needs and can respond to them timely in order to kind of keep on track with delivering your financial statements that may or may not be required for government or some other stakeholder. Requests for electronic evidence, screen share sessions, video calls. This will be required to assist us in executing our procedures. So it's really going to change the landscape as to how we complete these assignments. And as I mentioned before, just increased rigor around procedures such as going concern, future forecasts, and other areas that may be impacted by recent events. So that was the bulk of our presentation. So we do have the link in there. So as we said, there is a hub where we've been updating kind of constantly as new things are released or new programs are identified. Kind of continue to check there, and you can get access to more information. But that was what we wanted to cover. So we'll kind of pause, and I see one question in there. But if anyone has any questions, feel free to text them into the question and answer program. So so the next question is the March 18th date for the 10% rebate. What does that date mean? Work date or the paid date?
So so basically the wage subsidy program, it's actually the date paid. So even if you have employees that you're paying on March 18th or after for employment before that date, it's basically the calculations based on the date paid. Yeah. So actually the date on whether they actually receive their remuneration is what the calculation is based on.
So another question here: how do you register with Service Canada for the Work Share program?
Rob, I think you may have had some experience.
Yeah. So it's really dealing with Service Canada directly. I can probably provide some more information to that offline, but I did have a client reach out to me last night who basically spent the whole day on the phone with Service Canada, trying to get through to Service Canada with no luck. So there may be some things that can be done online. So I can provide some more information to that once we close here. So if I had a payday on March 20th, I can take the rebate on 100% of the payroll.
Yeah, so the calculation is basically, yes, you can include the March 20th. That would be, you're right, 100% of that payroll can be used as part of that calculation. Remember that the subsidy itself is 10%, and it is on a employee basis. So the maximum that you can take is $1,375 per employee. So just keep those in mind. But yes, if you had, a full 2-week payroll that actually got paid out on March 20th, that would be completely included in that calculation.
And I guess one follow-up to that program. So there is no reporting that's done with that. So it's going to be really important that you're keeping good records to make sure that you've tracked, you haven't overextended the limit on how much you can claim per employee. So if CRA does end up reviewing that over the next few months to make sure that what you've done is appropriate, you want to just make sure that you're keeping track by employee so that you're not overcalculating there.
Yeah, and I'll just skip there, Rob. So there's a couple of follow-up questions. I don't know the specifics on this, but I think if you are paying vacation pay, that would be included. That's all essentially taxable income, so that would be included in the calculation for the gross payroll amount that was paid. And there's another question on ROEs for employees. And I think I did mention before, and I haven't done this, and maybe Rob, you can comment on this, but there is a web access program that I think people have said it's been speeding it up by up to a week in accessing employment process. Is that?
Yeah, I think there is a web access. If I can find some information on that, I'll send that out as well.
Yeah. So we're just looking at a couple other questions here, and I'll address the shorter one first. How does the sub work? And I think that's the employment insurance supplementary program. I think you're referring to there. Yes, that is just a top up of employees who have been laid off. So again, there are some employers that have a similar type program that has to be registered with Service Canada, and it's just to provide an additional benefit to employees who who have been laid off for whatever reason.
Hi, Jill. I see your question there. So so I guess that's where you just need to. So what Jill's asked is. She's opening a cidery in Sydney with product ready at the end of April. No longer have the option to sell product through the tasting room, but can possibly sell by delivering cans locally and through the NSLC. Does it make sense to pivot the business and make local deliveries in order to meet fixed costs rather than putting everything on hold? So I think basically it's kind of taking a look at what the cost is. So if you're going to incur more costs by doing that in order to just do that remotely, it may not make sense. But if kind of your costs are fixed and you're not going to incur any more expenses, then that's still a way to get some revenue through the door in light of kind of not being able to open the tasting room on time.
Yeah, and I think just more in general nature too, Rob, like we are seeing some pretty innovative ideas coming out as to, rather than people just shutting up shop and waiting this out, they are coming up with ideas to, how can they sell a product, how they can deliver, can they do home to home delivery and just, leave things on door or for delivery services, all those types of things. So there are people doing a lot of different things given the circumstances. So there's a question about would you still be able to access some of those emergency supports if you don't take out a regular salary, and therefore if you're not taking a regular salary, you're not paying any of the EI, and in most cases, most business owners who would actually have control of their corporations, let's say in the corporate environment, would not be eligible for employment insurance anyway, even if they were taking a salary. But this emergency support benefit, that should be applicable to anyone affected by the COVID-19. And like I said, we haven't seen the exact details on this, but I would suspect this is being thought of somewhat as a catch-all. So if your business is being impacted by COVID-19 and your employment is being affected, then I think that will be available in these situations.
So Tyler's question there, has there been any indication of the ability for companies to refinance existing debt, especially with Crown Corps or other agencies, in order to get ahead and not just defer or add to debt? I'll say I haven't seen of that. Mostly the information we've been hearing is the banks are really just kind of focused on kind of pushing out the principal repayments and not necessarily going into refinancing agreements. I don't know if you've seen anything different, Patrick.
No, I think that's fine. Yeah. There's a question. I'm not 100% certain on this, but if you go on sick benefits initially and then are laid off directly afterwards, there'll be a 1 week waiting period. It was my understanding that waiting period has been waived in almost all circumstances. I don't know if you heard anything different, Rob, on that. But
no, I mean, everything that they've said is that they're eliminating that waiting period. So I don't think they would bring it back if you're going into EI for a different program or a different reason.
There's another question about employees taking vacation pay. I'm not sure on vacation pay if that would, if they took vacation pay and let's say as part of their last pay, I'm not sure if that would actually extend the period. I know, for example, and we can follow up on that and see what we can find out. I know, for example, like retirement allowances or any type of some special payments do extend the period where you would not be eligible for your employment insurance, but we can follow up on that. My initial thoughts would be that that would not impact your employment insurance claim, but we can follow up on that. And we will confirm, this is just a question on EI, we will confirm about the 1 week waiting period being renounced in all cases.
And so, Jill, you have another question. Where there's an option to lease rather than buy, i.e. leasing kegs versus buying kegs, does it make sense to keep as much cash as possible by leasing kegs, meaning less cost up front but more expensive in the long term? Yeah, I would say that's a reasonable, if you think you're going to be very tight on cash, then that would be a reasonable option to take in order to kind of extend the extend what runway you have with the cash on hand. It's really just a matter of kind of taking that full look, and if you think there's going to be cash available by going the buying route and paying more upfront, then obviously that's going to be cheaper. But just really kind of stepping back and trying to understand what the impacts are going to be before you make any decision. So another question there. As an owner, we draw salaries. Would we qualify for the emergency support benefits?
Yes, I think the emergency support benefit is specifically for those who would not be otherwise eligible for employment insurance. So they would be specifically targeted for these types of taxpayers. And again, we don't have the specific details on this because they are coming out in early April, but yes, I think that you will be covered by the employment support benefit, the emergency support benefit.
Okay. Any other questions before we push it back to Carla? Okay.
All right, great. Thank you, everyone. So thank you, everyone, for joining us here today. We hope that you found this informative. Patrick and Rob have graciously agreed to get back to us with a few additional questions that everyone has had. Please do let us know. In the meantime, you can reach out to the partnership, info@capebretonpartnership.com. If you have any further things, we will be hosting more of these sessions in the future. Please stay tuned to our webpage and follow us online for more information on that. And again, thank you, everyone. Please stay safe. And we do have a short evaluation survey on your screen. If you could help answer some of those questions, that will help us to better serve the needs of the business community going forward. So again, thank you, everyone. And I hope you have a great day. And I'll ask Omar if you have any additional moderator things that you want to add. But otherwise, I hope everyone has a great day, and we will talk soon.
Well, thank you, Carla. This is it. Thank you for filling in the poll. We're seeing the results. That's really about it. Thank you.
Thank you.
Thanks, everyone.